All right, welcome everyone. Today we're taking a deep dive into something pretty interesting, Mahindra and Mahindra's second quarter earnings report. And let me tell you,
Okay.
there's a lot to unpack here. We've got surprisingly strong performance across the board, some bold moves in the EV space. They're even calling this, get this, a rare moment where everything's coming up roses.
Yeah, it really is. This kind of success across all their business segments, it's unusual for a conglomerate like M&M. They've got their fingers in so many different pies. But it doesn't seem like it's just luck. Their strategic focus on long-term growth seems to be really paying off.
So let's get into it. Let's start with the big picture. Overall performance, their consolidated profit after tax jumped 35% year over year. But here's what I found really interesting. Their services sector, it actually contributed more to profit than their iconic tractor segment this quarter. That's a pretty big shift, wouldn't you say?
Absolutely. It really highlights the growing importance of Mahindra Finance and Tech Mahindra to their overall profitability. And it really aligns with their strategy of diversifying, moving beyond their traditional strengths in autos and tractors.
Speaking of those strengths, let's look at their auto and farm segments. A whopping 18% surge in volume and a 23% jump in profit for the auto sector.
Yeah.
SUVs are hot for them right now.
Yeah, and it's really interesting to see this growth, because it actually comes despite kind of a counterintuitive pricing strategy. They actually reduced the price of their popular XUV 700 model. You'd think that'd hurt their margins, right?
Yeah. It seems like a risky move.
It was a calculated risk for sure, and it seems like it really paid off. They predicted the price reduction would boost sales volume, which it did, but more importantly, it also shifted the sales mix back towards the higher end model, so ultimately higher profits.
So it's like they use that lower price model as like a lure to bring customers in and then, bam, upsell them to the more profitable versions, right? Pretty clever.
Exactly. It shows a deep understanding of their market and a willingness to try unconventional tactics.
Now, while they're still clearly doing great with their traditional vehicles, the ICE vehicles, they're also making some pretty bold moves in the EV space. Those teasers they released for their new electric SUVs, the BE.06 and XEV 900, are definitely generating some buzz.
Yeah, for sure. M&M is making it very clear that they want to be a major player in the EV market, which is obviously evolving so rapidly. It's fascinating to see how they're planning to use their brand reputation for, ruggedness, reliability to attract customers in this new segment, but they're being realistic about the challenges too.
Yeah, they did mention that they don't expect these electric SUVs to fly off the shelves at the same pace as their ICE vehicles.
Right, exactly. They understand that EV adoption takes time, especially in a market like India.
And speaking of challenges, their international subsidiaries haven't exactly been a bright spot this quarter, have they?
No, not really, especially in North America. The tractor market there has really taken a hit. It's shrunk from, get this, 300,000 to 180,000 units over the past few years.
Whoa, that is a huge drop.
It is.
And they're facing some headwinds in Turkey too, right? With hyperinflation impacting their operations there. So how are they planning to, navigate these international challenges?
They're taking I'd say, measured approach, conducting a real deep dive analysis of these subsidiaries to figure out the best way forward. They've emphasized that they're in these markets for the long haul, but they're also not afraid to make tough decisions if they need to.
So strategic retreats or even, divestitures are on the table if they decide that's the best way to protect their overall profitability.
It seems that way, yeah. It's a real balancing act, mitigating risk while still preserving those long-term opportunities. They're not going to rush into anything, but they're also not going to just cling to struggling businesses out of, sentimentality.
Sounds like they're really focused on long-term sustainable growth, even if it means accepting some short-term bumps in the road.
That's a key takeaway from this earnings report for sure. They're not just chasing quick wins. They're playing the long game, even if it means making some difficult choices along the way.
And this long-term vision, it seems to be driving their investments in what they're calling growth gems. These are their new ventures, the ones they're betting on for future growth, right?
Exactly. And this includes some promising developments in renewable energy, hospitality, and logistics. They're especially excited about their renewable energy subsidiary, Sustain. They secured almost 1 gigawatt of capacity just this quarter.
Wow, on top of the 2 gigawatts they secured last year. They're really exceeding their original targets for renewable energy expansion, huh?
It really seems that way. They're really capitalizing on that growing demand for renewable energy solutions in India.
But their growth gems aren't just limited to renewable energy. They also mentioned some positive momentum in their hospitality and logistics businesses. Even logistics is seeing an uptick, and that's been a bit of a laggard lately.
Yeah, that's a good sign. It suggests their efforts to improve efficiency and execution in logistics are starting to work.
So they're diversifying their portfolio, betting on sectors that align with India's overall growth, right?
Exactly. They're not content to just stick with autos and tractors. They're looking ahead, positioning themselves to be leaders in those key growth sectors.
It's clear that M&M is a company in motion, juggling all these different priorities, navigating this rapidly changing business world. But it's not all smooth sailing, is it?
Of course not. Every company has risks and challenges.
Let's talk about those risks. What are some potential pitfalls that could throw a wrench in their ambitious plans?
Well, one of the big ones is the uncertainty around EV adoption rates.
Right. They're investing a lot in EVs, but we don't know how quickly consumers will embrace this new tech.
Exactly. And this uncertainty could affect their capacity utilization, their return on investment. What if EV adoption is slower than they expect? They could end up with excess capacity and lower profitability.
Another risk is their reliance on government incentives for their EV business. They're really banking on qualifying for those incentives under India's production-linked incentive scheme. But there's no guarantee they'll get all the incentives they're hoping for.
And if they don't, well, it could impact the pricing and profitability of their EVs, making it harder for them to compete in this market, which is getting more and more crowded.
So navigating that regulatory landscape and securing those incentives is going to be crucial for their EV success.
Absolutely. It's a key variable to keep an eye on.
We've covered a lot here, from their successes to the risks they face. It's a complex picture, but hopefully we've helped make sense of it all, at least so far.
Yeah, we've looked at their wins, their plans, the challenges ahead. Now it's up to you to weigh these things and form your own conclusions.
And we'll continue exploring the intricacies of M&M's business segments and their outlook in the next part of our deep dive.
We'll go even deeper into their strategic choices, their growth drivers, and the potential risks. Stay tuned.
So, picking up where we left off, this whole balancing act between their, traditional ICE vehicles and these ambitious EV plans, it's really a fascinating part of their strategy. On one hand, they've seriously ramped up their ICE vehicle capacity these last few years.
They went from a capacity of just 19,000 to 56,000 vehicles. That's a huge jump.
It is, and even then, they've said it's still not enough to keep up with the demand. Some of their plants are already running full tilt. So it really makes you wonder, right? Do they just keep pouring money into ICE production? Or do they shift gears and focus on those EV lines?
Yeah, it's a tough call, especially with all the uncertainty around how quickly people will adopt EVs. It's almost like they're trying to time the market, which is never easy.
Exactly. It's a calculated risk for sure. Basically hedging their bets, trying to squeeze the most out of that ICE business, while also, preparing for a future that might be all EVs. So on the EV side, how are they planning to handle those risks we talked about? The uncertainty with adoption rates and their reliance on those government incentives.
Well, about those adoption rates, their approach seems to be cautiously optimistic. They're not expecting overnight success, but they seem pretty confident that the demand for EVs is going to keep growing, especially as charging infrastructure gets better and those battery costs keep coming down.
Makes sense. It's more like a gradual thing, not some sudden revolution. But what about the government incentives? How sure are they that they'll actually qualify for those?
Well, they did admit that the whole qualification process for India's production-linked incentive scheme is, it's complicated and it takes time. They're hopeful, but they're also prepared for the possibility that they might not get every incentive they're hoping for.
So they're not putting all their eggs in one basket, right?
Exactly. They're diversifying their strategy, focusing on building a strong product lineup, making those supply chains really robust, and setting up partnerships so they're not just relying on the government,
Okay, that makes sense. Now let's go back to those international markets for a sec, where they've been facing those headwinds, especially North America and Turkey. How's their plan shaping up for tackling those?
It looks like a two-pronged approach. First, they're doing a deep dive, really analyzing those markets to figure out what's going wrong. Is it something specific to those markets, or is it problems with how they're operating there? Once they get a clear picture of the problems, then they can start developing some targeted solutions,
So it's gather the data, analyze it carefully, and then come up with a strategy.
Precisely. They're not rushing into anything. It's a very measured, data-driven approach to figure out the best way forward. The second part is exploring ways to kind of lessen the blow of these struggling markets on their overall profits.
So are they thinking of just pulling out completely? Or are they committed to sticking it out?
Well, they haven't ruled anything out, but they keep saying they're committed to those markets for the long haul. They're not going to jump ship just because of a few bad quarters, you know.
Yep. They're in it for the long game, weathering the storm and coming out stronger.
Exactly. They believe in the potential of those markets, but they're realistic about the challenges. It's all about balance, like we've been saying.
And this focus on long-term sustainable growth, it seemed to be a theme running through their whole strategy. It's there in their EV plans, their approach to those international markets, even those growth gems we talked about.
Absolutely. They're not just chasing profits in the short term. They're building a business for the future. One that's resilient, adaptable, ready to capitalize on new opportunities as they pop up.
Speaking of growth gems, let's dig a little deeper into those, especially their renewable energy subsidiary, Sustin.
Yeah, and they have every reason to be excited about it. They've secured something like 3 gigawatts of capacity in just the past year and a half. They're clearly tapping into a market that's exploding in India. Everyone wants renewable energy.
So is it safe to say they're betting big on renewable energy to drive their future growth?
Oh, absolutely. They see it as essential, both for business and for sustainability. It fits perfectly with India's goals for renewable energy, and it puts them in a great position to be a leader in this sector that's growing so fast.
But growth gems aren't just about renewable energy. What about their hospitality and logistics businesses? Are those showing promise too?
They are, definitely. Their hospitality business, they're known for their resorts, really high quality, great customer service, and they're looking at expanding even more. And remember that uptick in their logistics business.
Yeah, things are looking up after a bit of a slump.
Right. They've been working on cost efficiency, streamline their operations, and it's led to better performance, better profits. They're pretty optimistic about the future of logistics in India. There are some favorable trends in the industry, and their customer base keeps growing.
So basically, they're diversifying, betting on sectors that are aligned with India's overall growth trajectory.
Exactly. They're not just resting on their laurels in those traditional markets. They're looking ahead, getting ready to be a leader in those key growth sectors that'll benefit as India's economy expands.
It's a bold strategy, but it's not without risks.
Of course not. No business is without risk, and M&M is no exception.
So what are some of those risks that could potentially derail their plans? We've talked about the uncertainty around EV adoption rates and their reliance on government incentives. Anything else they should be wary of?
Well, one big one is their capacity constraints, specifically for manufacturing ICE vehicles. They're already hitting bottlenecks in some plants, and that could limit how many of their popular ICE models they can actually make, to meet the demand.
So they're kind of stuck, huh? If they invest more to expand ICE production, they risk being overexposed to a market that might soon be dominated by EVs. But if they don't expand, they risk losing market share to competitors who can actually meet that demand.
Yeah, it's a tough spot for companies going through this kind of technological shift. They have to make decisions today based on what they think the future will be, but they can't know for sure.
And then there's the ongoing issue with those international subsidiaries that aren't doing so well.
Right. How those international operations perform, especially in North America and Turkey, poses a pretty big risk. Those markets are struggling, and it's hard to say how quickly they'll bounce back.
They're analyzing those subsidiaries carefully, but they've also made it clear they're not afraid to make tough calls if they have to.
Which is smart. Getting out of a market can be costly and messy, but sometimes it's the best thing for the business in the long run. It's about weighing the pros and cons, looking at all the angles, and making a strategic decision based on the best information they have.
So we've covered a lot, the different parts of their business, what their industry looks like, their plans for growth, and the risks they're facing. It's really interesting to see how they're navigating everything, especially in such a rapidly changing environment.
Definitely. They're making big moves, taking calculated risks, and always adapting to new challenges and opportunities. It'll be interesting to see how things play out for them in the next few years.
For sure, we'll definitely be keeping an eye on them. But for now, let's take a little break and come back to explore some of the bigger takeaways from this deep dive.
Yeah, we'll get into those thought-provoking questions, the ones that go beyond the numbers and get us really thinking. Stay tuned.
Okay, so we're back and ready to tackle some of those big picture questions that came up during our look at Mahindra and Mahindra.
Yeah, the questions that go beyond just the numbers and make us think about the bigger trends affecting their industry and their long-term strategy.
Exactly. So let's go back to that balancing act we keep talking about, their commitment to both, those traditional ICE vehicles and EVs. How can they really manage both of those without spreading themselves too thin?
Well, that's the million-dollar question for every big automaker right now, isn't it? They've got these established businesses built on ICE tech, but the future is definitely electric. It's like they're trying to swap out the engine while the plane's still in the air.
Ha, that's a perfect analogy.
Yeah.
So is M&M playing it too safe? Are they risking falling behind in the EV race because they're still trying to get the most out of their ICE business?
It's a valid concern for sure, but their strategy seems to be based on the idea that, the switch to EVs won't be as sudden as some people think. They're betting that it'll be more gradual, with ICE vehicles still being important for a while, especially in markets like India where the charging infrastructure isn't as developed.
Right, especially in those rural areas where EVs might have a harder time catching on.
Yeah.
But they can't just ignore what's happening with EVs, right?
Yeah.
Are they doing enough to become a real leader in that market?
Well, they are investing in EV production, and they've got those new launches coming up, so it seems like they're serious about it. It's not just a toe in the water. They're diving right in. And they seem to be using their existing strengths to try and get an advantage.
You mean their reputation for building those tough, reliable vehicles?
Exactly. They want people to think of their electric SUVs as the go-to option if you want durability and performance. It's a good strategy, using their brand recognition and aiming for a specific part of the EV market.
Kind of like what Tesla did, right? They started with a niche market, those early adopters and luxury buyers, before going more mainstream. Could M&M do something similar?
It's definitely possible. The key is to get a strong foothold in one area and then slowly expand as the market grows.
Okay, so let's switch gears back to their international operations, especially North America and Turkey, where they've had those challenges. We talked about how they're carefully analyzing those markets and coming up with strategies, but how long can they wait before they have to make some tough decisions?
Well, it's about finding the right balance between being patient and being decisive. They need enough information to make good decisions, but they can't let those struggling subsidiaries drag them down forever,
So what are some possible scenarios we might see in those markets?
Well, in North America, they could go all in, invest more in developing new products and marketing to try and regain that lost ground. Or they could scale back, focus on specific areas or product lines where they're strong.
And what about Turkey? How are they handling the hyperinflation and all the economic uncertainty there?
They've said that the hyperinflation is more of an accounting issue than a cash flow problem, but it's still a major headache. Makes it hard to plan and invest for the future. They might restructure their operations, partner with local companies, or even think about selling off parts of the business if things don't get better.
Sounds like some tough choices ahead.
Yeah.
But they've shown they're willing to make those tough choices, focusing on the long term, even if it means sacrificing some short-term gains.
Exactly. They're not afraid to make hard decisions. It shows they're committed to building a business that can weather any storm.
So one last big picture question. What really sets M&M apart from their competitors? What are their core strengths that'll drive their success in the future?
I think a big one is their deep understanding of the Indian market. They've been in India for a long time, built strong relationships with customers, suppliers, the government. They really get the local culture, the regulations, what Indian consumers want.
And they've always been good at innovating too, right? Always coming up with new products and features that people in India love.
Absolutely. They're not just following trends, they're setting them.
Yeah.
And they're not afraid to take risks and try new things.
And we can't forget about their commitment to sustainability. It's not just talk. They're putting their money where their mouth is, investing in renewable energy and all sorts of initiatives that fit with their vision for a sustainable future.
Yeah, it's a fundamental part of who they are as a company. For them, sustainability isn't just good business, it's the right thing to do. It's a long-term investment that'll benefit everyone, their bottom line, the planet, the communities they work with.
So, as we wrap up this deep dive into Mahindra and Mahindra, I think it's clear they're a company with a vision, a history of success, and a real commitment to building a sustainable future. They've got challenges, sure, but they're also taking advantage of opportunities and making bold moves to set themselves up for success in the long run.
They're definitely a company to keep an eye on, that's for sure. They're at a turning point, navigating a changing industry and a world that's always in flux. It'll be interesting to see what they do next.
Absolutely. We'll be following their journey closely, and we hope this deep dive has given you a better understanding of this really interesting company. Thanks for joining us.